the Jet Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, and welcome to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U. And today we're thrilled to have Christian Rivera as our guest. Christian is the founder of the E-Commerce Accountants, a firm that specializes in tax, accounting, and business structuring for the fast-growing e-commerce industry. With extensive experience working with digital marketers, Amazon sellers, and some of the most influential names in the e-commerce space, Christian has become a trusted advisor on wealth building strategies, tax planning, and navigating the financial complexities of online businesses. We're excited to dive into his insight and how entrepreneurs can thrive in this new global environment. Welcome, Christian.
Thanks so much for having me, David.
Absolutely. We're excited to have you on this podcast. So let's get started. First and foremost, if you could tell us, Chris, you've worked with some of the most influential figures in the e-commerce space. What are some of the key strategies that you recommend for entrepreneurs looking to build long-term wealth in this new global environment?
Yeah, so a couple of things. It depends. We work exclusively with entrepreneurs. So understanding the difference between a lifestyle business as well as, building a brand, and reinvesting back into your business, and understanding that just because that cash doesn't come out of the business doesn't mean it's, not growing your net worth per se.
Absolutely.
So understanding what your business is worth at all times is very important. I'm a back to basics, understand fundamentals type of person. So, with our clients, I'm always preaching, hey, we don't love seeing debt on your balance sheet. We don't like seeing interest accruing liabilities. So understanding the implications of that stuff can have a huge effect, especially if you consider compounding interest and things like that. So for me, understanding what your business is worth and things that make it grow, and understanding how that affects you as a person from a wealth accrual standpoint, but also understanding the basics of things like compounding interest, how that could benefit you if you're on the green side of it, and how it can hurt you if you're on the paying side of it. So for me, I mostly stick to those two things when dealing with entrepreneurs.
Fantastic. Thank you. So with the rising e-commerce industry, how have the tax planning and business structuring needs that's evolved over this period of time for entrepreneurs compared to the traditional brick and mortar businesses? Can you talk and elaborate a little bit more about that?
Yeah. So for e-commerce business owners, things are changing very, very quickly because with social media marketing specifically, the barriers to entry are quite low. This is probably one of the only points in history where a small business with one or two founders and no venture-backed funding or anything like that can compete with major brands through social media and through influencers and through all kinds of stuff. So what happens is you have a lot of small businesses in terms of headcount, founders, no venture backing, et cetera, that are making a lot of money. And now we have complex tax planning strategies that can come up because these entrepreneurs have budget as well as earnings that can justify, putting things into place. I would say right now, and this is getting wider and wider as time goes on, but there are more and more e-commerce entrepreneurs getting into the space and thriving at levels that we've never seen before as an accounting firm.
So many business owners aim to retire comfortably, and we're going to be slightly briefly touched up on that, but they're looking to aim and plan for retirement comfortably while still maintaining control of their ventures. What are some of the retirement planning advice that you would give to those entrepreneurs and business owners that are very fast-paced in a very fast-paced industries like this e-commerce industry?
Yeah, so I wish a lot more of our clients would focus on retirement stuff. We did a study on our clients about a year ago, And most of our clients are between the ages of 25 and 33. When I say
Wow.
most, I mean like 92% of them are between those ages. So
Young,
very young
young.
entrepreneurs that are not really forward thinking into retirement. But it is important to plan for it nonetheless. I'm an entrepreneur as well, and I plan for retirement. So it's really twofold for me when entrepreneurs bring this up, and also when we're bringing it up to entrepreneurs. The first thing is going back to that, understanding what your business is worth. If you understand what an exit value can look like for you, you'll know that kind of what's sitting in the piggy bank for when you decide to exit and maybe sell off your brand to someone else who wants to continue where you left off, right? So that's an important part of it. If you want to stay involved, there's ways to structure deals that will keep you involved, whether that's from an equity standpoint, consulting, maybe a little bit of both. So there's definitely that part of it. In terms of the more traditional route, I love Roth tax planning strategies. If you
Hmm.
sit down and do the math and figure out if you contribute money into a Roth account and you do those calculations to see compounded earnings over time, the earnings are quite substantial, and the tax bill, if done correctly, wind up being 0%. So it's really one of the most effective tax planning strategies that you can implement over the course of your life if you get started early, for sure. So
Absolutely.
we educate all of our clients on the tax benefits of Roth accounts.
Do you provide both Roth account, retirement account scenarios, as well as the traditional pre-tax, put it in there, get a tax break today, but you pay the taxes down the road?
Yeah, so personally, I'm not a fan of the traditional route. We do
Okay.
educate our clients on it, and we do have clients that do it. So we educate them on both ways. Here's the thing with traditional accounts. You get tax savings now upfront, but that money goes into an account, can't touch it to your 59 and a half, depending on the type of account you have, but most of the time you can't touch that money to your 59 and a half. There's exceptions to it, obviously, but
Of course.
when that money comes out, right? All of that money that you put in and got the tax benefit for, you are paying income taxes when it comes out. And although over the course of time, that money grows through compounded earnings, again, that's tax deferred. But when you pull that money out, you're paying income taxes on it. Whereas with a Roth account, you put that money in, sure, you don't get a deduction up front, but those earnings accumulate over the course of time. And when you pull that money out, the entire thing comes out tax free. So if you sit down and do the math, scenario one versus scenario two, what are the tax implications of both? You get a far greater return on investment through a Roth account.
I
So usually
absolutely.
when we sit down and educate a client and they actually do a retirement plan, once we show both sides of the argument and they fully understand what we're doing, they more often than not go with some sort of Roth strategy.
They have to believe in the fact that if future tax rates in the US are going to go up or down, if they believe that it's going to go up, then Roth obviously is a no brainer. It's sort of how we would say it. Do you want to be taxed on the seed or the harvest? And that really is a great analogy as far as I'm concerned. Hopefully, you feel the same.
I'm going to steal that from you. So hopefully there's no trademark on that
No,
by you,
no
David.
trademark. Please use it discretionally at your disposal. Um,
Sure.
You just spoke a little bit about the importance of staying in terms of taxes, keeping up with tax efficiencies and tax regulations. What are some of the common tax pitfalls that e-commerce business owners should watch out for? Because it's a very dynamic type of a industry and relatively new, especially for international markets as they grow. The e-commerce grows because now there's no dividing lines compared to the brick and mortar type of a businesses. So can you elaborate on that and give us a little bit of clarity about that?
Yeah. So, as any great accountant will tell you, it depends. And the thing is, you hit the nail right on the head with the international markets. We're noticing a lot of things here. We're noticing American-based entrepreneurs that ship overseas, and then we're noticing foreign entrepreneurs that are shipping into the US, right? So it kind of works both ways, and the tax implications are drastically different depending on what scenario you fall into. So there's definitely not one size fits all, other than I believe that pretty much all entrepreneurs that are operating in the US should have some sort of legal entity here. But let's just keep it simple here. We'll break it into two categories. Let's talk about the American people first, and then we'll talk about the foreign people second, because
Great.
the tax planning strategies are completely different. If you're an American, it's obviously great to be an American. I'm proud to be an American. But one of the things that stinks about being an American is the tax rules can be quite gruesome if you don't approach them in the correct way. One of the things that's unique to the US compared to other countries in the world is that the IRS taxes you on your worldwide income. So that means if you, David, were to move to, let's say, India and start a business there and start operating, and you're living in India, your office is in India, employees are in India, you might think, great, I don't have to pay US income taxes. But if you're a US citizen, that's not the case. You, as a US citizen, are taxed on your worldwide income. They'll give you a tax credit if you pay taxes in India, in this example. But for the most part, they're going to tax that income, period. Right. So making sure you understand things like that are very important in terms of exposure to foreign markets, like shipping to foreign markets, as well as living elsewhere. But in terms of a strategy, typically with American entrepreneurs, it's one size fits all, maybe two sizes fit all. But you're either going to go with an S corp tax structure or C corp tax structure, depending on a couple different circumstances. C corp makes the most sense if you're fundraising, if you're venture backed or something like that. Maybe you have a partner that's foreign or something like that. Those are some scenarios for which a C corp could make sense. But for most of the market, I'd say 70 to 80% of entrepreneurs who live in the US that are e-commerce sellers that are US citizens, S corp definitely makes the most amount of sense. It's the most bang for your buck in terms of tax savings. It's pretty simple to set up, and that works pretty well for most of our clients. It also scales up really nicely. The more money you make, the more tax strategy opportunities that exist with an S corp structure. And I just want to make sure we understand the scope. We're talking about e-commerce entrepreneurs here. Some other types of businesses don't really work, for those structures like real estate or stuff like that.
Absolutely.
In terms of the foreign entrepreneurs, it depends on a lot of things, but usually setting up an LLC in the US with either a C corp structure or no election at all is the best structure for foreign entrepreneurs. It depends on things like, do you have inventory sitting in the US? Do you have a tax treaty in the country you live in? Do you have business partners in other countries? The foreign entrepreneurs, it gets a lot more complicated for sure. But what I will say is we could do a lot of cool stuff with the foreign guys. We do transfer pricing plans, management agreements, blocker corporations. We've done all kinds of cool stuff with foreign e-commerce entrepreneurs, including sometimes we've gotten some of our clients down to 0% tax rate, they just happen to have the right tax structure in the US. They're living in a place that has a 0% tax rate. They're not tripping up any effectively connected income rules in the US. So with the foreign guys, we can oftentimes drive that tax rate way down through some cool structuring stuff that we do.
Awesome. I love what you do. As the global economy becomes more interconnected, how do you think and should entrepreneurs adjust their taxes and financial strategies to protect their wealth across borders? How do you go about helping them and providing them the value-add advice?
Yeah. So I would say, and I'm biased, so I'm an accountant.
Please do.
Understanding your compliance risk in places. The thing is with tax compliance, and this is with accountants, this is not a popular answer, but I'm a fellow entrepreneur, and this is the way I think of it. If you were to really boil down where you have compliance risk everywhere in the world, it's really impossible, especially as an e-commerce entrepreneur that's manually shipping products to different countries. Some countries have very, very low thresholds so that they can collect some sort of tax revenues from you, whether that's VAT, sales tax, income taxes, who knows what kinds of stuff exist out there. The reality is it's pretty much impossible to know every single tax rule in every single country and what places you have risk. So often we tell entrepreneurs, understand the risks in places that you have a strong footprint in terms of a business presence. Where do you have the most sales? If you have a lot of sales in the UK, what kinds of tax risk issues can come up? Do you have to be VAT compliant? Do you have to set up a tax structure in the UK? Consulting with a local tax professional there might make sense. So for me, understanding your tax compliance risk is very, very important to protect yourself, especially if you have a physical presence somewhere. Like if you have inventory sitting in the UK, you have a lot of sales sitting in the UK, and you're not VAT tax compliant or paying UK income taxes, not a very safe position to be in. So, just thinking where tax authorities can come after you, I think could be very advantageous.
You've worked at Ernst & Young for a number of years. And from your experience there, being an e-commerce accountant, what are some of the most effective wealth preservation strategies for business owners operating in high growth sectors?
Yeah. So when I was at Ernst and Young, I didn't specialize in e-commerce. Actually,
Okay.
when I was at Ernst and Young, it was kind of the opposite of what I was doing. I worked with big businesses like Fortune
Okay.
500 companies, massive companies, Hess Corp, Barnes and Noble, Squarespace, these huge, huge companies. I've even worked on IPOs for Shake Shack and Squarespace. So
Cool.
I had a lot of big business experience.
Mhm.
I was in a group, I forget the name of the group right now, but we focused on retail, specifically companies that had in-person retail, like
Mhm.
storefronts and stuff like that. Think Barnes and Noble as an example. What was happening in that group is we were noticing a trend that as e-commerce was growing, presumably as that was growing, that in-person experience kind of goes the other way, right? If you are going to buy an iPad and you can get in your car, drive all the way to Best Buy and buy an iPad there, or I could just take a 10-minute break from work and just buy it on Amazon real quick. You see the time difference there, right? And
Absolutely.
oftentimes the pricing is probably the same. So it makes complete sense. So what I was noticing at work in the group I was in was there was this trend where these businesses were starting to trend down and struggle to acquire customers. Um, and just by chance, this wasn't by design. When I left Ernst and Young to start my accounting firm, I was really struggling to find where I wanted to niche down, what type of accountant I wanted to be. Did I want to work with Uber drivers or real estate businesses or whatever? And I kind of stumbled across e-commerce accidentally, and it's just kind of ironic how the opposite. I'm kind of in that opposite space now. So I just want to make sure that was clear. But yeah, I'm sorry, I lost track of your question. I just wanted to say I didn't do e-commerce accounting at Ernst and
Okay.
Young.
Fair enough. So, what are some of the suggestions in terms of effective wealth preservation strategies for business owners that are operating in high growth sectors? You've worked with some of the big brands that are both brick and mortar as well as having a huge e-commerce impact in that
Yeah.
space. Just your thoughts are about that.
Yeah. So when I was at Ernst and Young, it was very corporate. We were a little bit disconnected from the founders there, but in my business now, we work with founders directly. In terms of wealth accrual, again, I always recognize that I'm working with an entrepreneur and accumulating wealth is an important thing to them. They often come to us as accountants to give them our advice. And I echo the same things I mentioned before. Basic things. Obviously, things like tax optimization are important, but also things like understanding basic things that you're doing. How are you funding your business? Are you funding it through debt? What does that debt mean? Do you need that debt? Do you need that capital? Do you have cash that you can tap into now? Or is there lower interest options or understanding what compounded interest does over the course of time, and
Yeah, you
not
mentioned
leaving
that.
it on your balance sheet so that it's accumulating because paying interest is not just paying interest. If you leave it outstanding for long enough, you're paying interest on interest, and then you're paying interest on interest.
I
So it
get you.
compounds over time. So in terms of accumulating wealth, that's very important. Another hack that I tell my clients all the time, many of them go off and they buy a house, and it's oftentimes a very expensive house. And I always show them, hey, this is what your mortgage is, right? If you calculate what that interest is over time, if you spent $1.5 million on your house, you're not paying $1.5 million for that house. If you do the math and multiply that monthly payment times 30 years, right? You might be paying 4.5 million, $5 million for that house.
That's
It's
right.
crazy what compounded interest does. So if you put an extra $10,000 towards your mortgage principal, I literally have a calculator that we show to our clients that shows them, hey, if you pay an extra $5,000 per month every single month, this is how much money you will save over the life of your mortgage. I did this with my own house. I just purchased my first house a year ago, and I'm almost
Congratulations.
halfway paying it down because I am like, any additional dollar that we get out of the business or any way that I receive compensation, I'm like, do I want to buy the shiny object, a fancy car, or can I just keep my car for another year and just pay down my friggin' mortgage instead of buying a depreciating asset, that might cost $200,000? Why don't I take that money and apply it towards my house? And instead of paying for a loan for a depreciating asset, now I'm paying towards a house that's most likely going to appreciate over time. and I'm cutting down on that lifetime interest. So simple decisions like that can have a massive impact on your wealth accumulation over time.
Absolutely, especially when a young entrepreneur that you're working with who's got a very long, extended time horizon to build wealth, every little decision, whether you should pay a mortgage down more or less, has significant impacts. These are all dents that you can help build so that it is a positive overall result for the long term.
100%.
So the digital economy is moving quickly, as you would agree with that. It's a fast pace, lightning speed. How do you help your clients prepare for long-term financial stability in such a dynamic market as in e-commerce? And what role does proactive tax planning play in your services?
Yeah. So definitely tax planning is something that, similar to what we were talking about before, has a compounding effect over time, right? So
Absolutely.
if you save $15,000 in taxes this year, right? Where you deploy that money, it depends on kind of where you deploy it. It can have a drastically different impact. So if you were to take that $15,000 and apply it towards, let's just make up something simple, an interest accruing note, right? You lend it out and you're generating interest, something very simple. Now you save money in taxes, so that's newfound money, and you're deploying it in a place that's generating income, right? So a big and this is a big pain point to us, and unfortunately our clients don't always listen, but there is benefit to being an entrepreneur and buying the shiny object, a nice watch, a Lamborghini. I have 18-year-old clients that drive Lamborghinis. Like, that's not an exaggeration. I
That
had
they
a
bought
client that,
themselves? That they bought
yes,
themselves with their own money
yes,
that they
yeah,
built?
with
Okay.
their own money. I
Okay.
had a client that didn't even have his driver's license yet, that went out with his dad and bought himself a Tesla for when he turned 16. So I've seen crazy things. But again, going out and buying a car, there's a place for that. As a successful entrepreneur, reward yourself. You work hard, you deserve nice things. But that shouldn't be everything. You also have to be forward thinking too, because you just want to be smart about where you're deploying your capital. If you were to compound that and you save now, instead of $15,000, but $15,000 every year over the course of 10 years, that's $150,000 that if you deploy it in an area that is generating income, you now you have a return on investment on that newfound money. So being smart about what you do with your money and thinking long term is very important. One thing that works really great with our clients are profit tracking apps. And we don't really help with wealth accumulation per se, but we do get asked a lot of questions around it. And pretty much every time I tell them to go out and download one of those profit tracking apps, and I use one, it's called Empower. And it's really great to see when you spend money on things, how does it impact your net worth? So if I have a car, let's say, in the app, what it does is it tracks what the value is on that car if I were to sell it. And what happens is you see that value kind of goes down every year, right? Whereas
Wow.
if I'm paying down my mortgage, I can see the impact of, damn, I paid $1,000 towards my mortgage, but it only came down by $6,000 or whatever. Why? Because
Clever.
of interest, right? So the thing is, that understanding the impact of where you're putting your money and understanding how it impacts you in the long run is very important. So
Awesome.
that's the tool that we recommend to a lot of entrepreneurs.
Empower. Okay. That is a cool app. I'll have to look into that. For our listeners and viewers, take a look at app stores of wherever you get your apps from. In a constant shifting global tax landscape, what's the best advice for entrepreneurs looking to minimize tax liabilities while scaling their business internationally?
Yeah. So definitely consulting with a professional is the obvious answer.
Like yourself?
Right. Like us, or whatever space you're in. If you're an e-commerce entrepreneur, it makes sense to work with us. If you're in that position. But if you have a different type of business model and you're substantially growing, understanding who the experts are in your space, not only in terms of, hey, can I put numbers on a form and do your tax return, but how can you be strategic about business structuring, about where you're deploying your capital in your business and things like that. I do believe that there's a tremendous amount of value in that. But again, going
Very
back to what
cool.
I said before, understanding where your business has a footprint, because if you're an e-commerce entrepreneur sitting in the US, but 90% of your sales are in the Netherlands, maybe you don't have as much tax risk here as you thought, and really your tax risk is
Over
over
there.
there,
Sure,
right?
sure.
And that's not the case in every situation, but understanding, maybe speaking to multiple professionals to figure out a game plan so that you can move forward and know what's going on and how you're going to be impacted in terms of how you're operating.
Got it. Get professional advice. For those that are planning their financial future in today's environment, what essential steps should entrepreneurs take that will ensure that they're financially prepared for the future, for the retirement, and potentially future increase in taxes in terms of the tax laws? We're talking here in the United States, of course.
Yeah, 100%. So I do think starting from the beginning, focus on consulting with a professional to figure out a good tax structure that works for you in terms of optimizing for taxes, but also doesn't tie up all your money in the business so you can't live. So making sure you have a good, clean tax structure, you're following everything that your accountant's telling you to a T, and making sure that is clean for sure. Outside of that, just because your business is doing well, be smart as an individual as well. If you have cash, think about what you're doing with that cash. Think about where you're putting that money. Are you spending too much in areas that aren't helping you grow? And if not, maybe you need to redeploy some of that money elsewhere. So I think a combination of those two things would leave you in a position with good balance in terms of wealth accumulation.
Awesome. So you're working with some of the most influential figures in e-commerce space, the entrepreneurs and people that are aspiring to be entrepreneurs and building their businesses. Feel comfortable in name dropping or eavesdropping in terms of the people, or at least the businesses, some of the cool things that are in this space that are upcoming?
Yeah. So we've signed a bunch of NDAs in the past, so I don't know if I can
Gotcha.
name drop for sure. But
Okay.
what I could say is that for those of you that are active on social, it's pretty easy to find us on pretty much any platform, and
Mhm.
you'll see testimonial videos from major influencers in the space. Also on our website, we have a page dedicated to testimonial videos, and there you see some of the largest YouTubers in the e-commerce space that actually are our clients. And it's pretty cool. So we strategically handpicked those guys and said, hey, listen, you're a client, you're very popular. And hey, if you're having a great experience, please give us a testimonial. And it's pretty much unanimous. Everyone says yes. If you do a good job, you work hard
Fantastic.
and kind of prove what you're doing, people are eager to help. So we're
And
lucky with that.
for our viewers and listeners, how do they get a hold of you?
Yeah. So we're on all social channels at Ecom Accountants. So it's really easy to remember. ECOMACCOUNATS. So Ecom Accountants. I think I spelled that right.
We'll make sure
So
we
you can
put that
find
on
us.
the, yeah, we'll make sure we put that on the screen here.
Yeah, Instagram, YouTube, TikTok, all the major ones. You can find us on our website, theecommerceaccountants.com. If you go to Google and search for e-commerce accountants, Chris Rivera, it'll be really easy to find our website that way too. So yeah, those are the best ways to get in touch with us.
Fantastic. I want to thank you for joining us today on our episode of Jet Setting Wealth Advisory. I want to thank you, Christian Rivera, for sharing your highly valuable insights into tax planning, business structuring, and financial strategies in this rapidly evolving e-commerce landscape, working with young entrepreneurs. For those of you that are looking to learn more about Christian's work and how the e-commerce accountants can help optimize your business financial success, again, it's www.ecommerceaccountants.com. We appreciate your support and look forward to having you with us for our next episode. Until then, I'm David T. Yu, airline pilot, founder, and wealth advisor of DTY Wealth Planning Solutions. Don't forget to subscribe and leave us a review. Until next time, stay focused on your financial goals and keep your strategies sharp. Thank you and goodbye.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.